Hi traders, this is Michael and I'm back with to do a recap on my 823 US dollar Canadian dollar analysis. I was basically looking at what we started off at a weekly time frame on my 823 videos. If you go and look at them, I recommend you do before looking at this video if you haven't seen them yet, just to do a recap. It's 827 is the date and it's 9:01 p.m. Eastern Standard Time. And I just wanted to, do a little recap to see what happened and to see where we're at now with the U.S. dollar, Canadian dollar. Obviously, there's been a lot of volatility in the U.S. equity markets, which is fed over to the U.S. dollar, and there's been a lot of, actually, what I've seen is a lot of people doing cross currency trades, which essentially, if you were to, for example, do a JPY based currency, JPY Canadian dollar, or excuse me, Canadian dollar JPY or a Euro JPY. There's a lot of risk trades out there, and the JPY is a really volatile risk currency as well. But the US dollar has been acting really unpredictably and erratically, essentially, because, like I mentioned in some previous videos on the DXY analysis that I did, technical analysis, the DXY, the dollar index, has been acting really odd because there has been a lot of volatility, abnormal action in the U.S. equities markets, and the U.S. dollar essentially should be a safe haven currency, and it should, in theory or empirically, should rise when the equity markets sell off, just like gold would rise or be expected to rise when equity markets sell off, as a sell-off in equity markets is essentially interpreted as a risk sell-off, and those are safe haven assets. The U.S. dollar was acting more as a risky asset itself, as what I expect was more or less deleveraging from long carry trades related to the FOMC rate hikes that are anticipated, and they will be releasing results in September on those. So I also mentioned that there was two options that we were under 1.32. We're actually right at where we're at right now when I did the last video. As you can see, on 823 is when I did my last video, which is right here. Basically, when we jump down to lower time frames, I have 10-minute and a 15-minute, we're basically talking about how waiting for a pullback and buying in and doing a 3-to-1 stop loss ratio. And I mentioned that indicating, basically looking at my 5-3 wave patterns and from the Elliott wave count and my Fibonacci ratios among the stochastics and a few other things, I expected an extension and still possibly expect that extension up to 1.35. And what happened, and I basically said that if we catch a retracement and we do a 3-to-1 profit loss, and this is why you have to be very tactical with Forex, you would have entered around, tried to enter around 1.3150 or 1.3120. I'm not sure that this day actually made it down. It actually made it down to 1.3175, so that wouldn't have gotten executed. The other thing too I was mentioning was the 1.32 is a very, very strong, or at the time was very strong and still is very strong resistance at level. And I mentioned that if it blows through that level, traders are going to be like, they're going to see that level. They're going to definitely, everybody's going to be looking at that level and they're going to buy in. And it's going to have a very, very rapid increase, upswing. So essentially it broke through here and it rose up and it kept rising, and you can see everybody jumped on. There was some dips downwards. It actually came back down below 1.32 on the 25th and then went back up and propelled upwards again. If you're using Fibonacci ratios, you would have been able to probably catch that swing, or if you didn't exit over here, if you were to place the 1.32 buy stop trade that I mentioned in my previous video and left it in, you would have still been in the trade up here, and we didn't quite make it to 1.35. 1.34 was a very strong resistance level, and now we're back down below 1.32. But this indicates to me, considering the large swing, the test of this 0.618 area, and also the Bollinger Bands pointing down, we're oversold with stochastics, And now there's a second chance, I believe, to get in, and not necessarily on a 1.35 trade, but I believe that there's some actual, considering the large pullback to the 0.618 Fibonacci ratio, I believe that there's going to actually be some channel trading opportunities, at least for the days to come. As you can see, we're on a 3-hour time frame, and I'm still bullish the US dollar, and I still believe that 1.35 level will be had. But the fact that we retrace so much, there's a lot of volatility in the markets, and just the pattern that's showing up here, and how it's gradually it's going up and coming back down, being and it's sort of negating this 1.32 area as it's breaking through it. And as it breaks through it more and more on these intraday charts, it starts, in the eyes of the traders, in the eyes of the masses, it starts to be viewed as, for lack of better words, a joke. As it goes, and to add a little more to that, my Fibonacci ratio of 0.5 happens to be the only ratio in a Fibonacci sequence that is only serves as a separator. It's actually not a true ratio. So as it breaks through this 1.32 area, it's going to still be a support and resistance zone, but it won't be as significant as it was before, as traders are seeing it. Oh, well, it's breaking through, so it can't be that important. That's just one thing to keep in the back of your mind. Another thing, too, is we're way oversold here in the stochastics area. Stochastics is in the way oversold region. You could see over here when it was oversold, when it came back up, we had not only these little bounces upwards, but we also had eventually this rise all the way up here and through the 1.32 area essentially. So I believe we're going to see some channel trading between the 0.618 line you have here and 1.3, about 1.34. So essentially, I believe it's eventually going to be between 1.32 and 1.34. Right now, looking at how far oversold the stochastics are, I'm betting on a test of this 0.618 line. We're looking at about 1.3170, give or take. And I'm thinking that if we put a buy stop at 1.3 to do a shorter term trade, if we wanted to do it like a scalp trade right now, putting a buy stop in at about 1.3170, and then if you wanted to do a conservative exit, if we took a horizontal, this is just a quick down and dirty trade, we took a horizontal resistance level here, and this level seems very strong to me. There's a lot of consolidation right there. It's at 1.3248. It's about 1.3250, almost intermediate psychological resistance level. So if right now, I'm going to assume for this video that we do an entry at 1.3170, and we put our sell limit at 1.3250. That is about a 70 pip profit. So if we take a third of 70, then that is about 20, we'll call it 23. 23 is essentially going to be our stop. So we're going to put the stop at 1.3170 minus 23. It'll be about 1.3148, give or take. So if we do 1.3148, that's right below another intermediate psychological support level, so it works out perfectly. So we're going to assume that trade, and we're going to come back later on. I'll come back tomorrow morning, and we'll see how this thing played out. Thank you.